Are we ready? Recording on? Yes? Okay. All right. Hello, everybody, and welcome to this live session, FX Street with Nailing FX. My name is Pedro Mejias, and I will tell you a little bit about the order flow system that I trade with. And before we begin, we should read the disclaimers. The following video clips demonstrations are for educational and instructional purpose only. Tradewithufos provides this video purely for the purpose of demonstrating the method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only. It is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Right, this trading session is brought to you by Tradewithufos, Trade with UFOs, and Skydex, Trading in the Cloud, Forex Virtual Machine Hosting. And well, let me show you a little bit about the what Tradewithufos is with the trading with UFO. This is the euro futures that we'll be looking at today. And here you can see these red bars and circles here. These are the UFOs. And what this provides us are possible entries, depending on your bias, you're buying or selling, depending on the market conditions. Of course, you have to first have your own bias before using any of these indicators. And once you have your bias, you should find an entry spot. And this indicator, the UFOs, what it does is mark you here possible pending orders that might be on the markets. And we will be looking into that in more detail, in the pending orders and all that, in the order flow chart, so you can understand better how the UFO system is working and give you a very precise trading opportunities in any market. Okay, let's move this away a little bit. And Skydex is another sponsor we have here. Is trading technology for Forex market. It's a VPS for NT4 and NT5. And the good thing about this is that you don't need to download anything or install anything. Everything is integrated on the cloud. So you don't have to download any application, not even the NT4 or the NT5. You just start uploading your EA or whatever system you use into the NT4 or NT5 platform, and you forget about it. It's 24/7 online all the time. You can even access through your mobile phone without downloading any application. And prices are very competitive as well, only $10 per month, and you have a lot of features. And if you are a provider, you can actually have the white label system as well, okay, to integrate into your own website. All right, that's our sponsor. And well, let's go to the charts right now. Well, before going to the chart, let me remind you, you're watching this recording. My name is Pedro Mejias, and this is my email right here, pedro@tradewithufos.com. If you have any questions regarding this session or previous session you may find in FX Street, just send me an email. We're happy to reply you. And here is my Trade with UFO link. It's tradewithufos.com/Pedro, where you can get access to the UFO indicator for Trading View or TradeStation. All right. And if you are watching right now live, thank you for joining in. And you can use the chat in here on the session to ask any question. And also you can send me an email if you need anything later, okay? So let's jump to the chart. I have here is the euro. And I want to talk you a little bit about how to spot we might call support and resistance level, but based on volume. Okay, that's very important. It's the most important thing on trading is volume. So we have to use it in order to get the best possible trading opportunities and to have also security when we're trading. I don't know if it's your first time here on my sessions. This is my order flow trading platform. You can get the platform. Just send me an email. I will send you the link so you can have it as well. This yellow line here is the beginning of the session. Okay, so this would be yesterday's session right here. And what I like to do is always look at what happened yesterday, try to find where the money was yesterday so it can influence or not today's session. Okay. Hello, Luis. How you doing? Welcome. All right. Let's see. As you can see, what I call rotation, that's very important. I mean, we're using a bar chart, right? We can see the candlesticks. And with the candlesticks, we get the red and green bars. And rotation, what I call rotation is like the changing between red and green in this case, in a specific range, okay? That's what I call rotation. Let me just highlight one rotation for you so you can see what I'm talking about. Okay, this will be a rotation. You can see how the price is bouncing up and down from these two imaginary lines I just draw on, right? And I can do that remember, this is yesterday's session, okay? This is not today, this is yesterday. So I want to show you something. We haven't seen yet today's session, so let's just select a few rotations here that we might be looking at right now. Okay, well, there are many rotations, but you just need to highlight a few or just one above or below the current price. You can see another one. So now, after this yellow line, is today's session, right? And we can see how this rotation here, this one right here, how the price was traded above this yellow line and then traded below. And in today's session, you can see how the price has been below this rotation here. So that means that there is some interest to keep the price below this this highlighted area here. Okay, so we can use that as a reference, maybe to set up our stop losses or take profit depending on the bias we will be trading today. Okay, and other thing we can see here, I don't use many indicators. Maybe you see the chart like it's have a lot of stuff, but it's actually have almost nothing on it. This is just a big VWAP, okay? And this is the liquidity of the market on the right side. And below is the speed of the tape. If you don't know what the tape is, let me show you. This is the tape, and it registers every trade that is made on the market in real time. So you can see here every trade that is being taken in real time, how many contracts, the price, okay, and the size of those trades. Okay, we can see everything here. This is a tape. It's like a a book that keeps everything in a register, right? So this indicator I have here, it just shows me when the sellers or the buyers are being aggressive. Okay, we can see when this spike up is meaning that there is a speed on the tape. The tape is receiving a lot of trades real fast. Okay, that's what it actually means. And I use this only to see who's being more aggressive than other. Okay, I can see here, for example, that the sellers were very aggressive in this price area because they have 578 contracts on this small period of time, and the buyers were only 300 or less here, 292 at the moment where the sellers were at 578. So that means that the sellers were very, very aggressive at that time. So I use that just to have an idea of, the forces that are being dominated right now in the market. Okay, remember, if you have any question, please use the chat or send me an email later if you want. Okay, the other thing I have here on the chart is this white line. It's the big WAP. It's a volume average. That's it. And these two blue lines are the same big WAP, but one here in this case, one negative deviation, two deviations, and the same but positive, one deviation and two deviation positive. So it's pretty much the same line, but with one and two deviations. Okay, and I use that because many algorithm traders use these deviations as reference, and that's why we sometimes see price bouncing up and down from these lines. Okay, because they use that as well as reference, because according to the market, the big WAP is the most fair price you can find, right? Because it's the average volume price. So many market makers take this white line as reference for entry or selling, right? Buying or selling. And algorithm traders as well trade this as reference many times using the deviation of this big WAP, okay, the big WAP line. So it's very it's commonly used in the market, these average volume lines. Okay, so we can use that as well as visual reference when we decide which bias are we going to take, because it's easier if you say, for example, which bias am I going to take today, and I see the price is going below the volume average, I might decide to go short, right? I mean, it looks like the price is declining from when it start going down. But visual reference into account many other things when you decide a bias. For example, is the sellers or the buyers. In this case, we can see from the morning the buyers were in control. Now the sellers from this area here, we can see the tape. The sellers were very aggressive, are more like in control, right, at the moment. But delta is still positive, and the liquidity, you can see here, 9,000 versus 7,000, meaning that there's more liquidity here on the top than in the bottom. Okay, so there are more pending orders at the top here. All right, so that's things you have to consider when you are taking a bias on the market. Okay, this information, you have to use as much information as you can to have an edge and to be able to have real opportunities in the market. Okay, so we have this volume here, this rotation that we set up right here on the top. That might be, if depending on our bias, that might be our target if we're buying, or that can actually use as our selling area, okay, as well. One advantage we have is that we can see on the right side where are the market makers positioned, okay? We can see how many contracts they have in each price level. With these pending orders, we can see all the way up, okay? We can see all the way up. Where are the markets placed? You can see here a big order here, 434 lots at this price. Okay, we can go as high as we want. Okay, we can see a lot of contracts pending right there. Right, that's why we can see the liquidity on the upside and the downside the same way. You can see all the market orders, or the pending orders, where they are, how many, and they are there. See, 1,662 lots at this price. That's a lot of orders pending here. So how is this useful? How you can use that information? It doesn't matter your strategy or what you do. I mean, if it works, that's fine. But if, for example, oh no, you use something like, let's say, I don't know, a Fibonacci retracement, for example, or whatever you want to call it, and it happens to have in that price that you're looking at a lot of contracts like this or like this, it means something. It means that somebody else is actually looking at that price level. Okay, so it kind of like validates what you're looking at. So that's a very useful way to use the liquidity information. Okay, remember that these are pending orders, and pending orders do not move the market. Okay, it doesn't matter if there are 200 contracts here. If they are not taken, they won't move the market, or even if they are taken, they will move it maybe one tick. We don't know. Okay, that's not what moved the market. What actually moved the market is the aggressiveness of the traders, meaning the market orders. And you can see the market orders if you have this tool, for example. Let me clear this off for you so you can see a little bit better. Here on the middle columns, you can see the orders being taken in real time. Okay, these are the pending orders, the red and the blue, selling and buying. And these numbers that are appearing here between the price and the blue and the red column is the market orders. So if a market order or many market orders takes whatever is available here or pending, the price will move up one tick. If it's taken on the bid, it will move the price down. So if these guys are buying contracts and somebody's selling these contracts, so then the price will move down because we're extinguished the liquidity available here. Okay, we're taking all the liquidity and it's moving the price down. If somebody, I mean, these guys here are selling, right? They are pending orders, selling, and a buyer with the market orders take all the available lots here, that will move the price up. Okay, so meaning that the pending orders are there just waiting to be filled. They are not moving the market in any way. The only thing that is moving the market are the market orders. You can see how the liquidity is being taken now and the price is moving down. Okay, that's what actually moves any price in any market. Okay, the market orders, because you may have thousands of lots here waiting to be filled, but nobody's taking them. They will remain there forever. Okay, because that's what they're doing. They are just pending orders. So that's a very important fact you need to know to understand how it works in order to trade successfully. Okay, you need to know the mechanics of the market. So the order flow system is about that. It's about looking at the mechanics of the market, look at how the orders are coming and from where they are coming and how they are coming. So let me show you now what I'm talking about here, which are we are looking at the euro, and these that's our candlesticks, right? But now we're looking at the candlestick, and inside the candlesticks we can see everything. We can see all the trades that have been made in one side and the other. Okay, we can see how many are buying, how many are selling. And below here, we have like a resume of what's been happening in this candle. Okay, how many buyers, how many sellers, and the difference. In this case, it's negative, -6, -60, meaning that there are more sellers than buyers in this candle. Okay, that's why it is red. and that's why these are green. It's because the buyers orders were more than the selling orders. Okay, so this is only way you can see this is through the order flow. And how can you trade this? That's the interesting part. There are many ways you can trade this. You can scalp the market very easily with this information. For example, I have highlighted in red. You can see here this red number here and this green number. These are imbalances. Okay, I highlight the imbalances. What is imbalances? An imbalance is a huge difference. In this case, half a percentage of difference between a buyers and a sellers in diagonal in a given candle in this case. For example, this 54 has 85% difference between the buyers here, okay, this 17. So when there's a huge difference here between diagonal, this price in diagonal, we will be highlighted the imbalance. You can set this up any way you like. And this, in this case, 98 is I think 80% different between this 43 right here, okay? In selling and buying aggressiveness, okay? So how we can trade that? For example, one easy way to do that is when you see an imbalance like this in the top, like this in this candle, and the price, well, in this case, it was a selling balance and actually moved the price down. So you might wait for the price to reach back here and try to sell it again. But you have to look at the liquidity, how many you have here, right? If there is enough to make as a resistance, okay, it will work good. If you don't have any, the price might just go up very fast, very easy, okay? The best way to trade tops like this is when the imbalance is in the same way as the candle. Let me try to find one. Let me see if we can find one as I described here, for example. It's not right on the top, but it's good for an example. You can see how the price were coming up and there was a buying balance right here on the top, but the price didn't continue to go up. This green number means that there was a lot of money, putting a lot of money here to buy at this price level. So if normally you will think, well, there's a lot of people buying here, the price will continue to go up, right? But in this case, it didn't went up, so it went down. And these tops like this are good for a sell. When you see that the price is not moving any higher, just sell this, and you will see how the price will drop lower. One thing I recommend to you to do is to use the deviations as target, because they are pretty safe, probably very likely that the price will hit or get nearby the deviation, just like it did here. It touches here. You see the 64 in green, just about the deviation line, because they tried to stop it right there, but they failed. They continued to go down a little bit more, and you can see again how it touches the deviation again. Right. This is why I recommend you to use the volumes average with these deviations 1 and 2 as reference for taking profit mostly, okay, and entries as well. If you see an opportunity, I don't know, like this nearby a deviation, take it to the next one, okay, or nearby one tick or two or one tick about the deviation line, just to make sure, okay. You can see here how I just touch it, and then again try to touch the down one, okay. And you can see here again another deviation at the top. this time a selling one, and actually move the price down. And here you can see how it touches, again, the deviation line, okay, or we can use as target, and as very safe target to use 1, 2, or 3 ticks about the deviation, just to make sure that you don't get without the order being filled, okay? So, hello, the chat section, please use the chat right now. If you're watching the Trade with UFO software, you can just go here, tradewithufo.com/Pedro, and you can use the, you will have access to the Trade with UFO software, okay? Which is this one right here. It's pretty similar at what we are doing right now. And you will see this red or green in case of buyers, but there's nothing below. Where you can use this as reference for selling in this case, because we have a downside here. Here's the green one. See, this is the green one that you can use as target, okay? In this case, when selling. All right, it's very similar for what we're doing right now in the chart, but looking at the actual data, okay? And here it is. Remember that the price we saw here touched it here, then went back up. That's what it does all the time. You can see the speed of the tape. The sellings are being more aggressive here, this candle right now, but the price is moving higher at the moment, and it's touching the VWAP right now. Okay, that's what's happening actually in the market. One other thing I recommend you to do is when you're trading and you have find your bias and you have determined when to enter and where to exit, where to put your stop loss. Before that, always take a look at the economic calendar, because one of these big events might change everything. Okay, it might just change everything you're looking at, and it will, just invalid whatever you were doing there. So always take a look. If there's a big news coming in your way at the time you're trading, just be careful. Try to get out before this news release, because the market will get very unstable at that moment. The liquidity probably will just dry off. Everybody will pull their order off away from the market. You will see that if you have this liquidity, you will see when the news is coming, all these numbers are turned almost into zeros, okay? Because nobody wants to be in uncertainty like a big news, okay? After the news release happened, everybody will, resume what they were doing accordingly with what the news, says or whatever. I really don't care about, the what they say about in the news. I prefer to look at the data I see on the chart like this. Yeah, I prefer to see this, and because I can see actually what's going on, where's everybody putting their money on. Okay, we can see where the sellers are, where the buyers are, how many lots is in waiting here. All right, everything, we can see everything in this way. All right, let me show you another way you can use the order flow to trade. Is, remember that at the beginning we were talking about rotation, right? Like this, for example. And something that happens with rotation, we find a good one, so can have a very nice example. I think this one is good. This one right here. Okay, this rotation right here. Let's put a little bit smaller, like this. Okay, we are watching the price going up and down, and then this rotation is broken, right? It's a breakout, and there is a breakout candle, and we can see that the candle was this one. It doesn't matter if you are here. Let's say the market is here, it's already broke the price. It doesn't matter, okay? But you spot this rotation and you spot the breakout. But you can see that the price is about this rotation right here. So there's still opportunities to trade this, okay? So what I would do is just highlight this breakout candle, okay, like this. Let's remove this one. And I will look inside, okay? I will look inside that candle. Just expand a little bit. Go back. Okay. I will look inside that candle, these two candles in particular. You can see how the buyers put a lot of contracts here. Okay, you can see everything. You can see exactly what was traded at the moment of the breakout. You can see here the push with the 53 imbalance, and then they try to bring the price down with this 56 imbalance right here, and then with this 82, they finally made the final push on the upside. Okay, so what I will do is just take a look at the volume in this particular candle. Okay, let me remove this yellow line here, and let me put the volume tool again. All right, we can see exactly how many contracts that were traded at each price level here. Okay, and we can see that what I like to find is which is the highest volume. Is this one, 102, right? This one will be acting as a possible, in this case, support. So I will think that the price will drop back here again and touches this this price right here, okay, and it will possibly bounce back up. Okay, so I will highlight this with a horizontal ray just a little bit about, so I make sure I take the trade. Okay, and let's see now. Let's close this a little bit so we can see in the candles what happened. Well, you can see how the trade, then we can see how the price. You can look at how precise this was. That it actually the candle. You can see here how it touches here. There's a wick, right? There's a wick a little bit below, but just a few ticks. 1, 2, 3, 4 ticks went below. But the candle, the body of the candle actually begins here. All right, is right here where I draw this yellow line. Okay, so you can do this kind of trade every day, every time. You can see how now the price just went back up. Okay, again, you can use the deviation, the VWAP as target. Okay, or you can just move your stop loss and secure your profit once it passes a little bit about the deviation, or just close the whole trade here at the deviation. Or if you are aiming for the second one, you will look at the, in this case, the VWAP, which is actually about this deviation, but I will always make sure to take profit here, maybe 1 or 2 ticks below the deviation line, okay? And look, now it touches the VWAP line, which will be the second secondary target, maybe, okay? So that's one way. Another way you can trade with the order flow, looking for breakouts after a rotation, okay? That's another way you can trade this. And remember, always close your trade, take your profit, okay? Don't have hopes like, oh, hope this goes to heaven. But no, just take your profit. I always take my profit nearby the deviation. If I see, for example, that the breakout was too close for the deviation, I won't take it because it may not have as a good movement as this one, okay? I prefer when they have some space between the entry and the next deviation line. All right, so that's very, very simple. Sarat, if you want to have access to the platform, just send me an email. I will send you the links. Okay, my email is pedro@predictive.com. You can take a note. Just send me an email there. I will send you the link for you can try the software. Okay, and the order flow and the for the UFOs is this one. Okay, it shows you the the entry levels as well and profit taking. Just you can get into this link here, tradewithufo.com/Pedro, and you will get access to the Trade with UFO as well. Okay. All right. So you have any question, please use the chat or send me an email later if you want. Okay. So, well, this you see these red and green lines here. These are imbalances, but if I'm looking at the candles, I would like to see where the imbalances are. So that's why I have that activated as well on my chart. I can send you the template if you want. Okay. Once you have the platform installed and set up, I can send you my template if you want, or you can set it up yourself as you wish. All right. But if you are trying to use at least my method, I can send you the templates, so you can just put it on your own platform and start trading from there. Okay, start practicing, because this take practice is maybe it's a little bit complex at the beginning, but it have everything. Right, have all the information you need when you're trading. Have everything, all the data is here. There's nothing else out there. Okay, this is the pending orders, the trades, and there are a lot of other tools I'm not showing, but you can use. Remember, you have the depth of market here. Okay, to have these tools requires to have data of the market. Okay, in this case, I'm using the data from Rhythmic. Okay, it's the one who's providing me with the data of the market. Okay, everything I see here is from Rhythmic. They take the data from the market and put it here on my platform. So you will need a data provider. There are many. Okay, I'm using this one. It's very good. It only costs $20 per month. The data, right? So it's something that is very powerful, and it's really inexpensive, just $20. And you can see actually, all the pending order, the orders that have been put in the market, that have been taken out of the market, the volume at each price. You can see here the volume, but if you want to clear it up, for example, I just cleared up, and now it's the volume from the point I cleared up. I can see it, and I can see, just the whole historical volume here on the right. This one, for example, is the point of control. It's the biggest traded price of the day, 2,384 contracts at that price. You can see the market orders being taken in real time. You can see the pending orders, and you can customize this to whatever you want. Colors, positions, add stuff, clear up stuff, whatever. Had a lot of features. Very, very good. All right, let me just take this away. You can use the tape as well. On the tape, you can see everything that is being traded in real time. You can see here this green and yellow and red lines, the speed of the tape is the same indicator I have here. Okay, when something big happening, it will show me here with a spike. Okay, so I will know. And here it's mostly for a visual confirmation. You can see a lot of red, a lot of price dropping right now here. You can see how the candle is going red as well. And it's what's being traded in real time. Okay, you can filter this. For example, you only want to see when there is a trade with, I don't know, 10 lots. You can filter that. All right, you can filter from 1, 2, 3, whatever. Any amount of contract you want to see, you can filter this as well. So if useful is you start to learning how to read the tape. Okay, in the beginning of the market, all they used was this. Okay, the tape. It was not in this format. It was more as a report, paper report. All right, they analyzed this and made the trades according to what they see here. Okay, the biggest traders. That's what they did, and you can do that as well, but in a modern format, and you can filter it. So you can filter it to your liking. There are actually traders who only trades this way with the tape or the depth of market. Okay, with this, that's all they use. They don't use charts. Okay, me in particular, I don't use candles like this. I only showing you the candle so you can have a familiar thing to look at. But I will always look at is at the clusters, which are this. It actually is also called footprint charts. Okay, where it shows me everything that is being traded in real time as well. So I can spot in real time supports and resistance. Okay, based on volume. You can see, for example, here how these white boxes are the most volume traded price at each candle. Okay, so if I highlight the the ones that are in line with, you can see how it kind of forms like a support or resistance level. Okay, that's how it works. If you want to use that information, all right, that's how real support and resistance are formed. Okay, by volume, and there's no other thing. It's just volume. That's the only thing you should look at. Okay, all the time. See, sorry, I have a question. Okay, it is true that once the breakout candle occurs, next candle in future following support and resistance is not valid. Let me see. Next candle in future following support and resistance is not valid. I'm not sure what you mean, but let's see a breakout and maybe we can have let's go back to candles. Let's spot breakout. See, we have one right here. This one, for example. Okay, Sarat, what you're saying is that after a breakout, which the breakout was here because our rotation was this, right? So this was the breakout. The next candle in future following support and resistance is not valid. So what you're saying, if there were a support or resistance here, it will be invalid. That's what you're trying to say. All right, let's say that we have a support here, or a resistance here. There's no reason why it will be valid or invalid. I mean, look at this. If you have a breakout, all right, we're talking about volume. Right, a lot of volume was put inside this candle in order to move it away from the rotation area, right? Because you can understand the breakouts are traps, okay? Before the breakout, there was a trap. Here is a trap. There's a lot of traders that actually don't know where the price is going to move. Some are buyers, some are sellers, right? One side will lose, okay? You have to realize that. when you are trying to trade a breakout, you're trading a trap because you know that one side will lose. So one or the other will be trapped in here, okay? Because this is like a trap, like a box. But only the buyers in this case are the ones that escape uh, with success, right? The sellers are trapped in here. And what happened with the sellers? Well, some of them will hit their stop loss, and that will fuel, all right, the movement on the upside. Very fast, very easy. So you draw. Let's put this line here. If you drop this line as a resistance because you saw, I don't know, whatever. Let's say that you saw the resistance here because it was on top on this this price, whatever. I don't know how you determined where is the the resistance. Okay, you say here, right? I got it. Here, right? Yeah. When this happens, and you say, okay, this is my I don't know my resistance, my rotation for before, but this happened a breakout, and a rotation is an accumulation of trades from both sides, buyers and sellers, right? And when this is break, one side will enter in panic, in this case, the sellers, and they will start to hit their stop losses, right? They will start to close their trades. And if you're selling and you need to close your trade, what would you do? You need to buy it, all right? You need to buy back to get out. And if you're buying back, you will fuel the movement on the upside. Okay, that makes sense, right? They will fuel that movement because the losers are the fuel of the movement, right? And of course, if you have a previous support here or resistance, it will probably will be broken because of that, because the fuel of the losers, right? They are feeding this movement, okay, without any resistance. And that's what's happened all the time. But look at this. What happened when the price got back here? Remember that we put this line here in order to enter after the breakout. What happened? Why the price is back up again? Because some of these sellers that were trapping here, they're still with their orders open. And when they see the opportunity to close their trade, probably a break even or a small loss, they will take it. Okay, they will close the trade, and that again will fuel back the movement up. This time it doesn't go that high, you can see, as it was before. Well, it actually did. But it's because of that, because they're selling, they're buying back their sellers here, okay? And that's fueling another movement on the upside. And it's not only stop losses or people closing trades. There are also some buyers joining in, new traders joining in. There's a lot of activity on the market. So there will be losers closing the trade, but there also will be new buyers, joining the party, trying to make some profit. And that's what happened with the second wave. Let's call it the second wave, is about that. So I don't know if that answered your question, but anyway, I think it's very important to understand that market mechanics, and you can see that all the time. Try to spot breakout like this, and look at the volume on that breakout candle. Let me show you again the structure of that breakout candle, so you can spot that anytime, okay, in any given time. With the order flow system, you can spot where the volume was, okay, and where the least volume on that candle was traded. In this case, was the 19, okay. It's a smaller one. We don't pay attention to the top. We have to look inside, okay, in the middle. So the 19 was the smallest one. So that's why I put this yellow line here, and it actually traded pretty nicely. You can see the volume right below my yellow line again, in the same, right? Just one tick about the volume on the breakout. Okay, this is not coincidence. This happens all the time, all the time. This is why quantitative trading is more powerful than any technical analysis you may do, right? Because it's based on data, on facts, okay? Not on drawing stuff or figures or Fibonacci's or whatever. It's based on data, and nothing can beat this, okay? All right, that's it for today. We are 1 minute to finish, so let me just remind you my email. You want to have access to the software, and you want to see more of this trading style, this quantitative trading with the order flow, just send me an email at pedro@tradewithufos.com and asking me if you want to have access for the order flow software. I will send you the link to download. And you also have the tradewithufos.com/pedro. You want to use the UFO system as well, which is pretty good. All right. Hope you enjoy, and see you next time. I'm going to be on next Thursday on YouTube in tradewithufos.com/nailing FX. You can see the schedule there. All right. And see you next time. And thank you. Bye-bye.